Monday, August 12th, 2019, Maneco 64, home of alternative economics and contrarian views. So another example of investors never learning their lessons from the past. And I want to talk about Argentina today. We've seen Argentine bonds collapse today. There was an election yesterday in Argentina, and the opposition party did very well. And the markets now expect the President Macri to lose in October. And that would be bad news for all the investors that have piled money into Argentina again. And I want to focus on century bonds. Century bonds are basically bonds that are issued and they mature in 100 years. It's almost like a perpetual bond. The UK used to issue perpetual bonds back in the 19th century when it had a lot of credibility, when there was no inflation. Of course, those perpetual bonds are worth very little these days. I think they've been paid off anyways. They've been rolled into other bonds. But people who invested in the long term in those bonds, of course, ended up losing a lot of their capital because of inflation, the debasement of the currency. So, so this is what is going on this afternoon or today as it regards Argentina. It says here, FT, Argentine assets fall after Macri stumbles in primary vote. Peso tumbles and costs to hedge against the debt default surges. So if you are an investor or saver in Argentina today and you've held most of your money in Argentine pesos, you're not doing very well today. If you held your money in dollars, yes, you're doing okay. But if you held your money in gold, you're doing even better because gold is rising against the dollar, and it's definitely rising against the Argentine peso today. So I'll read here from the FT. It says, Argentina's currency tumbled on Monday and the cost to insure against a debt default swelled after opposition candidate Alberto Fernandez's win in primary elections stoked concerns of a populist comeback in presidential elections that are just 2 months away. The strong showing by Mr. Fernandez, whose running mate is former President Cristina Fernandez de Kirchner, prompted speculation that market-friendly President Mauricio Macri will lose October's election. Goes on to say, at the moment, it's looking like a first-round win for Fernandez, and the first-round win by that ticket is unabashedly bad news, said Greg Lesko, a portfolio manager at Deltec Asset Management. There is no silver lining to that. So the Argentine peso is dropped 22% in early trading today. It's traded, the dollar's traded up to 60 against the Argentine peso. Also, it says here that the difference between the price at which traders were willing to buy and sell currency was unusually wide in a sign of market stress, said Paul McNamara, fund manager focused on emerging markets at GAM. Well, what that means is the bid and offer spread is really wide. That's normal when markets get really disrupted. It's not only in emerging market that happens. In 2008, that happened. And that's when the liquidity collapses and market makers will make a spread as wide as the QE2. That's the joke, as spread as, as wide as a cruise ship because there's so much volatility. So it also goes to say several of the country's US dollar denominated bonds were under pressure. The price of one maturing in 2028 dropped to 59 cents on the dollar from 77 cents on Friday. Wow. Bloomberg data show. Monday's sell-off pushed the yield up to 14.3% from 10% at the end of last week. The yield on shorter dated government bonds maturing in 2021 spiked to distress levels of around 38%. The country's century bond, this is the fun part, which matures in 2117, tumbled nearly 17 cents to 56.4 cents on the dollar, the biggest fall since the debt was sold in 2017. So here's the chart of that Argentine century bond. Why would people buy this? Well, there's an article from a couple of years ago about this in the FT, which I found. Here it is. It says, how did Argentina pull off a 100-year bond sale? It says, despite past defaults, the Latin American country has sold debt maturing in a century. And this is what was said 2 years ago, just over 2 years ago, in June 2017. Little more than a year since Argentina's return to the capital markets with a record-breaking $16 billion issue, it pushed the boundaries even further on Monday by selling a 100-year bond. Before I go further, the only reason this is happening and Argentina was able to do this and other issuers have been able to do this is because longer maturity bonds, especially the 100-year bond, they pay more interest because there's more risk. And in this world of where 14 trillion of government bonds or bonds in total are negative yielding, it's normal that people are going to go crazy and take a punt or a chance that this could work. So it goes on to say, this article from over 2 years ago, this makes the market-friendly government of Mauricio Macri only the second Latin American sovereign to issue a so-called century bond after Mexico in 2010. But such a long maturity bond sale from a seemingly perennially troubled country raises a host of questions. So what does it say, the article? Why were there buyers, right? It says Argentina would probably never have made such a bold move without knowing that some investors were already interested, analysts said. And this is a guy, Alejo Costa, chief strategist at BTG Pactual in Buenos Aires. This is what he said. There has to be some big real money player behind this. And then Adam Bothamley, head of debt syndicate for HSBC, one of the banks that worked on the deal. This is what he said. It came in response to reverse inquiries where investors approach the issuer with a proposal that will meet its needs and theirs. This worked well for Argentina last year with its massively oversubscribed sale of local currency debt with local maturities. Well, this was before 2017, before they issued the century bonds, right? And it goes on to say, why 100 years? Mr. Costa explained that long duration bonds are the best way for real money investors to place bets on Argentina, given that they are unable to leverage themselves like a more nimble hedge fund. And he says, if you're an investor with a constructive view on Argentina, what you want is duration. Argentina sold $2.75 billion of the debt with a coupon of 7.125% or 7 1/8, equating to an annual yield of 7.9%. According to a statement from the Argentine Finance Ministry late on Monday, the bond attracted $9.75 billion in orders from investors. So it was almost 4 times oversubscribed, and these bonds now are worth less than 60 cents on the dollar. So this is an interesting comment here. It made me kind of laugh, and I'll read from the article. It says, but Mr. Macri's government cured the latest default in 2016, and times have changed, said Joe Harper, a partner at Explorador Capital Management, an investment fund focused on Latin America. And this is what this guy said last year. And I quote, The policy pendulum in Argentina has shifted to the center, and the country's next 100 years will be very different than the last century. So that was his sales line, and I guess he did quite well from the sale of these bonds. But the investors that bought these bonds are not laughing right now. I know it's still got 99 years or 98 years to go, and things could change. We could see Macri actually do well in the elections in October, and this bond could bounce back. I guess as a speculator, it might be an interesting purchase in the short term as a punt, even though I don't think so. I think it could go even lower. I don't think Macri is going to do very well because this is going to change everything here. The fact that the peso's dropped 25% in a day, we're going to see inflation rising. Yeah, not good. So I remember because Argentina has defaulted many times in the past. And I think the last time it defaulted was back in 2001. So it says here, Argentina has defaulted on its sovereign debt 8 times since independence in 1816. Spectacularly so in 2001 on $100 billion of bonds. At the time, the world's largest default, and most recently in 2014 after clashing with Elliott Management, an aggressive hedge fund. I remember really well in 2001 because I was in the city. I did a lot of business for Italian mutual funds, for Italian banks. That was a big part of my business, working with Italian institutions. And some of my clients who worked for these funds, they had put some money in Argentine bonds. Italians have a close affinity to Argentina. There are more people of Italian descent in Argentina than Spanish descent. And I remember at the time speaking to this client, and yeah, it's a lot of people lost a lot of money, and I don't think they got that much back. I'm not sure. And if they did, they had to wait years to get some of that money back. So it looks like people will never learn. And why is that? Well, because first of all, they don't look at the history. A lot of people don't look at the history. They also, how can I say, are forced to reach for yield. And especially in the kind of scenario we have, that's going to be more and more prevalent with zero interest rates, negative interest rates. So this is not surprising. Is this going to happen to other countries? I mean, Argentina defaulted in 2001. The crisis was contained. Will this be different, this crisis? Probably not. But it goes to show you how quickly things can change under a fiat currency system. That a currency like the Argentine peso can drop 25% in one day. There's also an article here in Barron's, and this is from June 28th, 2019. And it says, global bond markets are so crazy right now that even 100-year bonds are selling. So, yeah, this is not just in Argentina. European countries are getting involved. And I think it's very dangerous. I think investors need to be very careful where they put their money, even with professionals and funds. You should really do your homework before you give your money to like a bond fund or any fund, and make sure you know where they're putting the money, because some of your money could be going into these 100-year bonds. So what does Barron say? I'll read a little bit from here. It says, irrational exuberance has gotten a bad rap. The description of soaring securities prices was famously uttered in 1996 by Alan Greenspan, the maestro, as the former Federal Reserve chairman was once known. Of course, the dot-com bubble would proceed to inflate for more than 4 years after he pronounced that phrase. growing much larger and leaving behind those who had heeded his warning. Right now, the global bond markets are in the throes of irrationality, albeit without exuberance. Indeed, today's record low interest rates represent the depressive counterpoint to those manic days when we all wanted to party like it was 1999. That's one way to view the 13 trillion of global bonds with negative yields. I think it's now up to 14. A direct reflection of the sub-zero short-term interest rates imposed by the European Central Bank and other central banks outside the Eurozone, such as Switzerland's, some in Scandinavian, and the Bank of Japan. In Europe, bond investors must go to great lengths to earn a positive yield on a top-grade security, even 100 years. Austria this week tapped into that desire or desperation by selling a second tranche of its century bonds, originally issued almost 2 years ago with a 2.1% coupon at par. This time, an additional 1.25 billion euros or $1.42 billion of the bonds were offered at a price of 154 for a yield of 1.17% at maturity in September 2017. So there you can see the flip side of the Argentine case. This bond actually has done really well, and the price has gone up by 54% in less than 2 years, and that's because it has such a long duration, and yields dropped to 1.17 from 210. But the flip side is that if those yields start spiking and they go to 4%, that bond could be worth like 45 or 50 cents to the dollar. So that's the risk with these long-term or long-duration bonds or century bonds. Somewhat amazingly, it goes on to say that tiny yield looks like a bargain compared with the 3.25 billion of 5-year notes Austria also issued at a yield of minus 0.435%. So it's completely crazy. A lot of people are going to get hurt. Yeah, people who bought the Austrian bonds are doing well. When the ones that bought the first tranche. Now we can understand why falling yields can also help bond investors, especially when the duration is 100 years. Those bonds have gone from par to 154. Yes, the Argentinian has done the opposite, has gone from par to 56. So beware of these century bonds. Be very careful, in my opinion. If you enjoyed this video, think about subscribing to the channel if you haven't yet. Make sure you hit the like button. Make sure you share this video far and wide as well with people that you think would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.